Well, welcome to today's live stream. So the silver price dropping today fairly significantly, but if you ask me, you look at why the silver price fell today, it is a good day to be stacking silver. Now, as we wait for a few more people to get in on the live stream today, do me a favor and let me know in the chat if you bought the dip today. Did you buy any silver as the price was falling? Because, if you follow the dollar cost averaging strategy that I follow, this is exactly the kind of day that you want to be adding to your positions in physical silver bullion. And I did that today. Now, when you talk about why the silver price fell today, when we get into that, I think you will understand why I bought the dip. So first of all, let me tell you what I bought, and then we'll get into the news and why silver is under a little bit of pressure here, but why I think this is such a buying opportunity. So I picked up some more 90% junk silver from SD Bullion. They've got a sale on that right now, 99 cents over spot. And, as you can see, this has been sort of a focus of my stacking lately. I don't even bother taking the junk silver out of these rolls anymore, to be honest with you. Every roll I've ever picked up from SD Bullion is confirmed 90% silver. It makes it a little easier to organize them if you keep them in the rolls. One of the reasons I like the junk silver so much is, they're not making it anymore. But look, today, with the price of silver down over 4% at the lows, it doesn't matter if you're buying silver bars, silver coins, 90% junk silver. You could buy some silver maple leaves. It doesn't really matter, I don't think. The time is now to get your hands on physical metal while it remains cheap, and it is pretty cheap still. You look at gold, it's at a record all-time high, or still remains near record all-time highs. Silver back down to about $30 today. So let's talk about the news. Why did the price fall? Well, there's a few factors here that seem to be weighing on the price of silver. The first one is related to the geopolitical risk premiums which are priced into silver at the moment. Certainly geopolitical tensions very high around the world. Silver and gold as well as tangible physical assets without that counterparty risk. These are viewed as safe haven assets. And so during times of tumult, times of change, they have an increased appeal for investors. And earlier today, it was announced that the new Hezbollah deputy chief there in Lebanon, he backs a Lebanon ceasefire effort, omitting an end to the hostilities in Gaza as a condition of that ceasefire. Now, just because this guy, what's his name? The deputy leader, Naim Qassem, says he wants a ceasefire with Lebanon, I don't think that means we're necessarily going to get one anytime soon. And, if I was in this guy's shoes, I'd probably want a ceasefire as well. It wasn't too long ago that the former head of Hezbollah, Nasrallah there, was killed in an airstrike. And so, Lebanon and Hezbollah specifically, they've been suffering all sorts of issues with this war with Israel, from the pager attacks, the radio attacks, the assassination or killing of their leader. They've come under a lot of pressure. So they're pushing for a ceasefire now, or at least saying that they're open to it. I don't think that means that the war in the Middle East is going anywhere, but you did see oil coming under some pressure on this news as well. And I think that's part of why we saw this sell-off in gold, silver, and oil today. Another piece of news coinciding with this that seems to be weighing on the metals markets is related to China. So the China National Development and Reform Commission had a conference where they were widely anticipated to announce new stimulus measures. So China recently announced a large stimulus program to prop up stocks, to prop up real estate, to stimulate the Chinese economy. But at this meeting, they reiterated that they were confident in the growth of the Chinese economy, but they neglected to announce new stimulus. So this is disappointing investors who were expecting more easy money. Now, those are the two stories that are weighing on the price of silver today. At least, those seem to be the big ones that are causing this decline. So, in light of that, let's talk about geopolitical risk first. So, Israel and Lebanon, they're going at it. Israel is invading Lebanon. They're making incursions into southern Lebanon to try to stamp out Hezbollah. They're ramping up their airstrikes. They're launching airstrikes all over the region, and hostilities are very high. So the fact that the deputy leader of Hezbollah says he is in favor of a ceasefire, I don't think is an indication that hostilities are ending anytime soon. And this is just my objective analysis. I'm not trying to pick a side here, but it's clear that Israel, at least, means business here. They're really giving Hezbollah a difficult time. It looks like thus far Hezbollah has largely been just kind of left flapping in the wind by Iran, their ally in the region, their big ally in the region. Aside from the Iranian ballistic missile strike on Israel recently, they haven't really done much to back up Hezbollah. And without that backing, Hezbollah is not going to prevail in a conventional conflict with Israel, who has far greater military capability, and they're backed up by the U.S. in the region. So, yeah, they might ask for a ceasefire, but we're still kind of waiting for the other shooter drop to see how Israel responds to that missile attack by Iran. There's still the possibility that they could strike Iranian oil facilities. You hear, it's a back and forth every day about whether they'll do this or they'll do that. But I have a suspicion, my theory is that Israel may desire a larger regional war before the U.S. elections in November. Now, on that timetable, that means that we're anything from, a peace deal or a ceasefire being negotiated. In fact, I suspect that we will witness between now and the election a significant escalation in the Middle East. That's just my forecast, but that's how I see it. Feel free to let me know in the chat here on the live stream what you think about that. But the possibility of a full regional war breaking out over the course of the next month, I believe, is very real, and I just don't see the decline in geopolitical risk that the silver market seemed to price in today on this news. Now, as far as China goes and stimulus, around the world, we are going to see massive increases in stimulus. I mean, it might not be this week, it might not be tomorrow, but it is coming. And the reason is because the entire world is drowning in debt, right? This is the U.S. debt clock. You can see we are now at $35.6 trillion. We had a couple of days towards the end of September and October where, if you look at the official numbers from the Treasury, it was over the course of about 6 days that the U.S. national debt went up by about $380 billion over the course of a little less than a week. So, debt in the U.S. is exploding. Debt in China is exploding. That's why China has already announced this large stimulus program. Maybe they disappointed markets with this recent talking point, but guaranteed there is a lot more stimulus coming around the world. Central banks around the world are in a race to the bottom. Fiat currencies are being massively devalued. And this is the reason. It's because around the world, nations officially, their debt is north of $92 trillion now. The U.S. is just, one example of this with, this huge pile of debt, but China's got a lot of debt. Everybody's got a lot of debt. And that means you got to print a lot of fiat currency, because debt to the level of, in the U.S., $36 trillion and growing, around the world, almost $100 trillion. When you talk about unfunded liabilities, meaning money that the governments are on the hook to spend, the number is orders of magnitude larger than that even. The only way that that can be satisfied is by devaluing the currency. You can never pay off a debt of that magnitude with sound money. I mean, there's no way. You would have to default, right? But instead, what we're going to get is a default by another method, which is by printing the money. If you print the money, you can pay the debt off. Who are the main beneficiaries of inflation and money printing? Well, it's the biggest debtors, right? And the governments are the biggest debtors of all. They also happen to have a disproportionate influence on central bank policy. So you're going to see a lot of lip service among central bankers here and in China and elsewhere, about stimulating the economy, keeping the economy strong. But the real name of the game is debasement of the currency. And that is in order to enable massive government profligate spending, right? That is the reality. You won't hear them talk about it. If you listen to Jerome Powell or any of these other central bankers, like they get interviewed by Congress in congressional testimony, it becomes very clear that they are in cahoots with one another because they'll talk about all sorts of reasons why there's these various problems in the economy. Housing is so expensive, food is so expensive, the job market is not great, people have to take on multiple jobs, all these problems, but they never mention the real culprit, right? It's always some politician or corporate greed that is to blame. It's never the enormous levels of debt, the trillions of dollars that they're spending that they don't have. That never comes up, and the reason is because that's the real answer. And they will never mention that. And so, with that being understood, anything that is a physical, tangible asset outside of the financial system in which the currencies are being massively deflated, this is going to become very, very appealing once the emperor's clothes, or once it becomes clear that the emperor has no clothes, once people become wise to what is occurring. But there is a concerted effort to distract the public from this fact about the economy. And that is why, the price of silver remains so cheap. It's why gold, despite the fact that gold is at record nominal highs, still remains below its inflation adjusted all time high from 1980 by about $1,000 almost. Despite the fact that central banks, they're loading up on gold at the fastest pace on record since they began keeping records in the 1950s. Central banks are buying gold faster than any point in history, and yet, gold has done pretty well, but it hasn't taken out its previous highs yet. So, ahead of us, we have a major bull market in the precious metals, and that's why on dips, I like to buy more, especially junk silver, dimes, quarters, half dollars, the silver coins that they stopped minting in 1964, part of the debasement of our currency, which is ongoing and we're kind of entering the terminal phases of now. This is one of my favorite things to stack, and that's why I picked up some more of that from SD Bullion today. Also, I did something which I don't do often, and I don't really mention on the channel very frequently, but I did open a paper position in silver today, and that's how confident I am that we are, if not at the bottom, very near it, and the price is going to be heading higher in the near future. Now, I have to preface this by saying, this is not financial advice. I'm just a guy on YouTube. Don't go out there and make any trades based on what you hear me saying today. But today, when silver was down a little over 4%, I did open some paper positions, some leverage paper positions. I bought some call options on the SLV ETF. Now, if you're not familiar with what that means, basically I picked a date, which was January, and I made a bet that the price would be higher by that date. And if the price does that, my capital is at greater risk here, but it could move up much higher if the silver price rises. Now, the reason I did that was based on the factors which I just mentioned, but also the silver chart, which I want to look at here briefly with all of you. So I did a video last week regarding the risk of a pullback in silver, which we didn't get last week. I thought we might get it on Friday with the release of the jobs report, but we ended up getting it today. We actually did see a significant pullback today. Now, there's a few things on this chart that I want to draw your attention to. The first is the Fibonacci retracement chart, right? So that is this kind of colored chart here. And we're going from the most recent bottom in silver, which was around 27.70. And we've been on this kind of rip upward. We topped out just under $33. And then the idea here, this is all based on the golden mean, but you can kind of assess how far markets will pull back in their ascent, right? Because nothing moves up in a straight line. It kind of, even when silver goes up, it doesn't go straight up. It goes up and then it pulls back and then it goes up and it pulls back. And a lot of that has to do with market psychology. And all of this is reflected in the chart that you're looking at. So this green line that silver touched today, it actually slightly penetrated it and then bounced right back up. That is a 50% retracement. So based on these gains, from this price to this price, silver has now retraced about 50% of its gains. That's a significant line. The more significant line would be the 0.618 level. We might get that. That's around 29.70. We could get a pullback down to that level, but nothing is guaranteed. This is all just about probabilities. It's not about what's necessarily going to happen next. It's about what is likely to happen next, and just trying to get kind of an edge on the markets based on that. And this is just my analysis, but the fact that silver touched that line and then was rejected from it, you can see we're already up significantly off the lows. At the time we're doing this video, 30.66. Silver is already rising significantly following this pullback. I think it's quite likely that that could be the bottom. Also, the other thing I want to draw your attention to is something I've mentioned in recent videos, and this had to do with my forecast that I put out last week, that we would see a pullback, is this Elliott wave impulse. So again, this has to do with the fact that markets don't move up in a straight line, but the Elliott wave theory is that markets move up sort of in a predictable way. Like you get this big wave up, then you get a pullback, then you get a third wave up, then you get a pullback, and then you get a big wave. And then you might be set up for a correction. And this is actually how almost exactly the silver breakout occurred earlier this year. Now, I don't have that chart pulled up, but there's videos I've done on the channel in the past where I describe that. And the important thing to note here is that we are in the midst of yet another Elliott wave impulse higher. So we've had the first wave, we've had the first pullback, had the second wave higher, had the pullback, and now it looks like we are setting up for the next big wave higher. And then, you know, who knows? I mean, nothing moves up in a straight line. Maybe we'll get a pullback at that point. But I think this next wave, which we are about to embark on, could certainly take us up to the $35 level or higher, sort of at a base case. Now, that coincides with the technicals on the chart that is supported, I believe, by the technicals, but also when you examine the fundamentals for silver, you know, there's a deficit in the silver market, right? So that supports higher prices. There is ongoing geopolitical tension, clearly. And as I've mentioned, I think we might be headed for a full-scale regional war by the election, and that could coincide with that run up to 35 or higher. In fact, if that does happen, and you know, hopefully it doesn't, because that's not going to be good for anybody, but the effect on the precious metals could be very strong to the upside. I wouldn't be surprised if we end up taking out in the relatively near future silver's nominal all-time high of $50. I mean, you know, you see today a small piece of news sends the silver price down by over 4%. Seemingly small news. You know, the mention of a ceasefire, the lack of more additional stimulus. These are not like, you know, major headlines, and yet the silver price reacts in a fairly significant way. So when big things actually do take place, silver is a metal that has the potential to make huge gains. And that's why I think it's wise to have exposure to it. That's why I bought more of it today on this pullback. And we've already seen gold breaking out to record nominal highs. Gold will be taking out the inflation-adjusted highs as well. I am fairly confident of that. Now, when exactly, I don't know. 2025 seems like a good time, but because there's so much potential for, I mean, all sorts of crazy things to happen between now and the election, we are in, you know, a critical phase here. The FBI has been putting out terror warnings. The war in the Middle East now has been going on for over a year. Yesterday was the one-year anniversary of the October 7th attacks that kicked this whole thing off. There have been multiple attempts on the life of one of the candidates around the world. It's not just the Middle East. You've got Eastern Europe escalating. You've got the South China Sea escalating. There's a lot of things that could happen between now and the end of the year, and none of them are really going to be great for the global economy, but they could be good for safe haven assets, and that's partially why I believe the price is going to be a lot higher by the end of the year. There's other trends in play as well here that could take place before November even. For example, the global de-dollarization agenda, the trend of the Brics nations moving away from the US dollar as a means of conducting international trade. That is a trend which has been growing. I think many have been dismissing it as not a realistic threat. But, you know, this October, well, it is October, so in a couple weeks, there's going to be a meeting of the Brics nations in Kazan, Russia. Now, Russia is chairing the Brics conference this year. What have they told us is on the agenda? Well, it's circumventing the US dollar. That is the primary agenda. You know, last year we had two things that we were looking at as we headed into the Brics conference. One was the potential announcement of a Brics gold-backed currency. That did not manifest itself. The other thing was Brics expansion. We did see that. The Brics organization took on several new members: Egypt, the UAE, Saudi Arabia, several very important nations. Iran, by the way, Brics member now. So we got the expansion last year, but this year, I believe the focus will be on de-dollarization and circumventing the US dollar as a means of trade. And, this is a good spot to pause. I think we got 300 people on the live stream. That's awesome. Do me a favor, smash that like button. I only see 61 thumbs up. I'm sure that some of you are enjoying this video and getting some value from it. So do me a favor, smash that like button. Help get this information out into the algorithm. So one of the things that we will likely see at the conference is new mechanisms from the Brics nations regarding their payment systems, alternatives to the SWIFT system, for example. The reason they want this in place is because all of these Brics nations are frightened of running afoul of the US. I mean, they have seen what has happened to Russia following the 2022 invasion of Ukraine. $300 billion worth of Russian foreign reserves were frozen. They were kicked out of the SWIFT system. Now, they've managed to circumvent much of those sanctions and keep their economy running. But these other nations don't want to have to do that on the fly the way Russia was forced to. They want systems in place that will allow them to operate outside of the US and Western financial system. So they might be announcing new payment systems. They might be announcing new features of the Brics New Development Bank. They may be announcing new mechanisms of conducting bilateral trade in local currencies. That's something that we've seen building for years now. Already the UAE has sold crude oil to India for rupees. They've sold gas to China for yuan. Saudi Arabia, another new Brics member, they recently floated the idea of accepting the yuan in exchange for oil payments. And a big one, a big feature at this Brics conference that may be unveiled, and this is like a low probability event. I'm not saying it's necessarily going to occur, but if it does, it would be huge for gold, and that is the unveiling of a new Brics currency, which will be backed up in part by gold. That is the plan. They have actually told us this. I'm going to find the story for you here right now. I don't have it pulled up, so bear with me one moment. But they're telling us that they're going to be releasing new financial instruments, and this is the story. I've covered it in the recent videos, but it bears repeating. One of the instruments that they will potentially unveil, this is a story from the TASS news agency regarding this meeting and the things that will be unveiled at this, is a currency that will be 40% backed by gold. They call it the currency unit. And it says here in this article from Russian media, the unit project assumes that the value of the common unit of account is pegged by 40% to the value of gold, and by the remaining 60% to a basket of national currencies of the Brics countries. This approach can make it a convenient and universal instrument. And certainly when you're concerned about counterparty risk, you're worried about sanctions, what asset do you want more than gold? Well, I mean, maybe silver, but those are really it. Those are the historical monetary assets. And look, if they announce a gold-backed currency, that'll be huge for the price of gold. There will be a huge scramble by many of these nations, and the Brics roster is growing. Turkey wants to join now. A whole list of countries want to get in on this Brics thing. The demand among those countries alone for gold will be enormous. But here's the thing. You're not really going to see silver take off, I don't think, or even gold for that matter, until the public at large becomes aware of this phenomenon. And, suddenly a potential gold-backed currency on the world stage, coinciding with the outbreak of war and massive debts and inflation, this is the sort of thing that could get the precious metals on the radar of the public in a very big way. And when you see gold blowing through $3,000, the inflation is just at all-time high. Even with the official inflation statistics is like $3,400. So we're headed there for sure. But if you actually just take the size of the U.S. debt and you use that as a measure, because inflation numbers are all cooked anyway, right? The price of gold in 1980 hit $850, right? Let's just say 800 for convenience. You know, a nice, easy round number. Let's understate things. Well, the size of the U.S. debt back then was about $1 trillion. So today at $35 trillion, if the debt has grown by a factor of 35 and the money supply has exploded enormously, if you use that as the proxy for inflation, which is probably more accurate, then you would need the price of gold to amplify by a factor of 35 as well. And that would give you about $28,000 gold or more. Now, that might sound ridiculous to some people, I mean, because it's a very high number, but, you know, consider the amount of profligate spending that is taking place at the moment, and the fact that, you know, premiums on the precious metals are still very low. You can go buy junk silver at SD Bullion for 99 cents over spot. The public is not buying this stuff. There's not that much interest, right? Despite the fact that there's a deficit in silver, despite the fact that central banks are loading up on gold, despite the fact that inflation is out of control, and if you go buy groceries right now, you are aware of that. No, for the Harris supporters out there, price controls and punishing greedy grocers is not the answer, right? The answer is to stop printing money, but that's not going to happen. And so, you know, despite all those facts, the price of metals are still very low and the public isn't moving in. When they actually do, it's going to be such a massive surge into the precious metals. I mean, you probably won't even be able to get this stuff, right? Maybe you'll be able to buy a contract of the SLV, but if there's like a silver squeeze, if there's a short squeeze in the market, that's not going to do you much good. So the time is now. Right now, we have a window to prepare. And look, the window has been long. Of course, you know, silver is up, I think, more than the S&P 500 over the past 1 year. It's even outperformed gold. Maybe not today after today's pullback. I don't know. But they're all performing very well. But the gains that we've seen over the past year of like 30% plus in silver going to look like child's play when the real flight into the precious metals takes place. So it's not advice. I don't give advice, but my recommendation, I guess, to myself, and I'm taking it, is to acquire more physical assets while the prices remain suppressed. Now, some people look at the price of silver and they say, oh, it's below its 1980 high, it's below its 2011 high, it's not going anywhere. Well, it's up over 30% over the past year, and it's likely headed much higher for all of the factors that I have listed in today's video. So you see the price drop 4%. It's nothing to worry about if you are a stacker. It's something to be glad for. I mean, dips in the price of silver. Silver's a volatile metal, right? Occasionally it goes on sale. We get an opportunity to load up on some physical, real money at a discounted price. Today is one of those days. When we get those days, I like to take advantage of it. Let me know what you think in the comments down below. I don't think there's ever been a time where getting prepared for financial instability and calamity has been as important as it is right now. I mean, we are entering the terminal phases of this fiat currency experiment. There will be more war, there will be more stimulus, and today's drop in silver, it's really just some noise, and it's an opportunity to pick up some of this stuff that has been money for hundreds or even, you know, thousands of years. It's not going to change anytime soon, and it is on an incredible sale right now. So let me know what you think in the comments down below. Thanks for watching, everybody. Stay safe and happy stacking. Do me a favor, smash the like button if you haven't done that yet. Subscribe to the channel, share the video with your friends, and I will catch you next time. Smart Silver Stacker out.